Good afternoon, everyone, or good morning to our West Coast friends. I am Darius Blackford, the Organizational Director of the National Powersports Dealer Association. Welcome to today's webinar. Before we get started on our discussion about insurance and what do you do now that your insurance company left your market, we got a great panel today who's going to talk about that. I want to do a little bit of housekeeping. This is being recorded, and we're going to make this available afterwards through our YouTube channel, on our website. We're going to provide it through our special guest speaker today, Zach Materne from Apiar will also make it available. I also want to just very quickly touch on, if you're attending the AIM Expo next week in Las Vegas, we are excited to be part of that. We have a series of meetings at the NPDA taking place. The first one is 7:30 a.m. on Tuesday, February 6th. Now remember, East Coasters, that's 10:30 in the morning in your biological clock, so you'll be fine. And we're looking forward to that. We'll have another meeting late afternoon or late morning for our Harley Davidson Council. We'll be putting that on. The following day on Wednesday, 7:30, is when our partners, including our special guest, Zach Materne, will be presenting. And I'm also really excited that one of our panelists today, Kim Harrison, is being honored by the MIC for her 10 years of service to the Dealer Advisory Council. That'll be on Tuesday, late afternoon. So it's going to be a great event. We look forward to seeing folks there. And we're really honored today that our special guest, who's putting this on, Zach Materne from APR, will be presenting a couple times out there. Also welcome, as I mentioned, Kim Harrison, who is NPDA Secretary Treasurer, one of the founding board members, as well as a dealer out of Virginia. And Mark Sheffield, who is, some of you may know him, he is an industry, I call him a pundit. He writes a lot of position papers for us, and he just has a lot of good industry insights. He speaks to 20 groups. He's also a dealer out of Texas. We have to talk to him because New Braunfels is the home of Shinerbach, which I think there may be some stories he could share with us at some other point in time. So with that, I just we'll kick things off. Thank you to our panelists today, and Zach Materne from APR, take it away.
Darius, thank you. And Mark and Kim, thank you for joining me today. I'm very excited to be here as a former dealer and as now in the commercial risk management space. I'm excited to be part of the National Powersport Dealer Association and to have Apiar be a part of the National Powersport Dealer Association. First, let me introduce myself. Zach Materne. I'm from New Orleans, Louisiana. Just like I accidentally got into the insurance business, I also accidentally got into the motorcycle business. When I was a freshman in college, going to school for entertainment management, my mom and dad decided to open a Vespa dealership with zero retail and zero motorcycle experience. And so my brother and I decided to help out. And that grew over 17 years into one of Powersport Business Power 50 dealerships. We were in the nuance of this industry on the European side of this business. We were BMW, Triumph, Ducati, and Vespa. Some of you may know my brother. He's also a consultant in the industry. He works with Garage Composites. It's a service department consultant. Also has his new company, OCG Solutions. Once we sold the store in 19, I had to figure out what I wanted to do when I grew up. And, in the soul searching, I knew that I had a ton of experience. We really approached our dealership, metrically. Everything was measured. My brother and I are both sons of a CPA. So we really, everything was measurable. It was all spreadsheets and graphs and figuring out what was going on. I call it my MBA. So, in that soul searching of where I was going to go next, one of my clients and the guy that I road raced with for years said, "Hey, I think you'd be good at commercial insurance." And if you would have told me 10 years ago that I'd be selling insurance, I would have told you you're a crazy person. So I reluctantly got into it. But I was working for a big firm, which gave me a lot of opportunity to learn the space. And while I was in this space, I kept reflecting back on all of my 20 club meetings and all of the advising within the industry. I just never felt that there was really an expert in the insurance space, or what I would call risk management. And so I started researching and working, and actually the group that bought my store were my first guinea pig to say, hey, let me see if I can put this together. Right now, at that point, they were in 3 different states. Now they're in 4 different states, and I used them as a way for me to go to the market, figure out what was going on, and put this together. Um, Ultimately, over the last year, I had the opportunity. I was recruited by Apiar as they were putting together their specialty programs, to say, hey, there is this space of about 3,000 businesses, and nobody's really calling on them or talking to them about this. And so I'd really like to put this together. So over about a 6 month period of business planning, I joined Apiar this summer and started working on what this was going to look like, and really where that begins. As a broker, it's my job to be the advocate for the client. And so that starts with finding markets that are available. And so in the insurance space, there are a couple of different places. There are direct markets, like in this space, a direct market would be like a Zurich or a Federated or a Century, where you have a broker, but the broker's really only shopping you within their own program. And then you have somebody like me that goes out into the market and tries to find places to go outside of those direct markets. And if you know anything about insurance, there are standard markets and surplus markets. And more than 90% of the dealership space lives in that surplus market side. So you have to kind of look and find these people. And so some of this is also storytelling. Everything in this industry, in my experience, comes from, it's whatever rolls downhill from the car industry ends up making its way down here a decade later, right? And the numbers there are just so much larger. And so I started going to automotive garage underwriters, and open lot underwriters, and saying, "Hey, have you ever considered this space?" And I would always hear back, "Yeah, but this, it's speed, it's 2 wheels, it's not licensed if you're 4-wheel product." And trying to really start convincing them about what we know about this industry, and I'm assuming that nothing's really changed in the last 5 years since I've been out, but it was always that 60% of your business is repeat, 30% is referral. So these businesses know their clients, so the chance of a casualty exposure is a lot less than a commodity-based car dealership where you may never see that person again. Additionally, most of us as dealers, in most examples, keep a majority, if not all, of their inventory inside. So that changes an exposure for a company that's writing open lot policies in the Midwest, where hail is an issue. There's an opportunity here to kind of spread your risk around. So that's kind of where I've come in, and in this kind of soul searching and growing and kind of where I want to be. I not only want to be an advocate for you guys, the dealer, I want to be an advocate for the industry. And if that at the end of the day means I'm selling policies, that's great. But I've been given this opportunity to kind of pull the curtain back, talk to you guys as a former peer, and figure out what's going on. So that's kind of that's kind of the baseline of where I am and where I came from and why I'm here today. As Darius and I were talking about, what could be this first topic, as once we became a partner, what could be the first topic in one of these webinars? The biggest piece of big news in the last year that's happened in this space is that Century, as a direct underwriter, has pulled out of the space except for the Harley market. And so both Kim and Mark on this call have both been through this heartache over the last year. And that's actually the timing of me coming into this was a little serendipitous, because I've had a lot of conversations around this. And so if you've been in a place for 10 years, it's comfortable to be there. And you may complain about the premium, but you don't have to give all the information to the new guy, right? So my thought was, let me come at this from being on your side of the desk, understanding what I know, and kind of giving some advice on what to do when you're in this position, and talk at a high level about this, and go from there. So I think the first piece of this that's really important is, and this depends on size too, but really not looking at your insurance spend as a commodity, looking at a commodity buy, looking at it as a risk management strategy. As a general rule in this space, us as brokers, as we're like, looking at things, looking at a business, sizing it up based off of what we know, the general rule is revenue, 1% to 2% of your revenue, total revenue, is probably somewhere around your insurance spend. Now that could be a big swap between 1% and 2%. And that could also change depending on where you are in the country. I'm in New Orleans. Louisiana has some of the highest casualty or liability limit premiums. Additionally, we're prone to hurricanes, very similar to like a Florida. I mean, so in either one of those spaces, the premiums for property are going to be significantly more, and the options for where to go are going to be less. Like in Louisiana right now, you cannot get a wind and hail policy that's not written with the insurer of last resort. So there really is nowhere to go other than Louisiana citizens. So getting back to, so that's kind of that's where we start when I'm looking at a business. Where is their spend in relation to what their revenue is, and then from there, what are their limits and what does it look like? So you're going to have to spend money on premium regardless. That's going to be something that's going to come out of your P&L every year. And so let's make sure that what you're spending money on is actually aligning with what you need. One of the most frustrating parts of when we were in the business was, we were about a $5-6 million company. So we were kind of in that middle space where there wasn't a whole lot of places to go. Plus we're in Louisiana. On top of, so the Zurichs, the Centuries, and the Federators run right. So we had to go to a local broker. The local broker has no idea what we're doing other than what they think we're doing. So we had insurance coverage, but every single time we had an issue, we never had the coverage for the claim that we had. And we never had anybody to turn to say, hey, what's going on here? And so that's what I would like to be for the industry, whether or not I write your business or not. That's kind of where I want to sit. So when we're talking commodity buying versus risk management, it changes the way you're looking at things. And I want you to step back as a client and really think about what's going on. A big example of this is property limits. Your building may have been worth $1.9 million 5 years ago, but with building costs, what does a replacement cost value look like that? If your store burned down today, is your limit correct? Because that could be because if it isn't correct, that could be a tremendous out-of-pocket expense, or maybe even shut you down forever if you're not covered correctly. So I don't start with premium. I start with limits and then work from premium. Not to say that premium isn't important, but the commodity buy is going to say, oh, well, this price is cheaper than this price. Well, what does this price have in it? So I guess I kind of want to open this up to Mark and Kim a little bit. I know both of you have recently gone from Century to a broker with other places. Do you have any experiences to talk to that specifically about limits and premiums and how that looks, or what the experience has been like over the last couple of months with that?
I'm going to go first, Kim.
Oh, I was going to say, I can definitely speak to limits from a claim perspective. We had a storm come through that was unexpected. It dropped 3 inches in 30 minutes and basically flooded our whole warehouse and our whole service department. And this was about 3 years ago. And we quickly started realizing that we might have a problem because the value of customers' vehicles that were in our service department well exceeded the coverage level that we had on our policy. It was perfect timing. It was in the middle of the season. We had a couple of really, really rare, expensive bikes that had come in for service. The pricing of everything has gone up, drastically, and that part of the policy had never been adjusted. We got lucky that we had enough coverage to pay all the claims that for our customers that had liability only, and the other customers could file claims with their carriers, and we didn't have that much subrogation. So we came out okay, but we realized that you definitely have to look at those limits.
Yeah, that annual limit review is really important, and making sure that you're realistic about it. I understand that 6 or 7 figure number could look really high, but in those situations, it's really important to understand, hey, do I want to take this risk or do I not want to take this risk?
Yeah, just like a fire. Just every bike in my shop was taken out, in 30 minutes.
Right.
So it can happen.
My time at Spader, I get to, in 20 groups, get to work with a lot of dealers who have had major losses. When you talk about the building coverage, I think one of the pieces that a lot of dealers don't really understand is co-insurance. And a lot of people tend to think of co-insurance like they do with their personal health care, not recognizing that if you have a building that's worth $3 million and you only insure it for $2 million, co-insurance on property insurance means that you're only going to get 66% of the damage because you only had the building insured for 2/3 of its real value. And so that's one that really tends to catch a lot of dealers out.
Yes, yeah, and in like I said, living in a storm prone area, this is definitely something that we see a lot of in this industry and outside of this industry as well. The next thing I want to talk about too is the relationship with the broker and understanding the broker. And Mark and I had a great conversation post. Mark and I were on a panel together at the Accelerate conference, and then we started working on some stuff in between in between that time. And he just renewed today, right, Mark?
4 o'clock last night.
4 o'clock last night. So it's really important that you trust your broker, and that you're willing to look at us as brokers as people that are there to advocate for you and make sure that they understand what you're doing. We're only as strong as the information that we're given. And I know Kim mentioned this. We were preparing for this call today. I kind of sent some talking points. It is a lot of work. It's a lot of work to move your insurance because because it's like going on a couple first dates together and giving all your financial information and that's possible. It's an arduous process, and it's an arduous process on this side. But just like my mom used to say, garbage in, garbage out. If we don't have the information that we need, we cannot be successful in the market, because there are 4 or 5 markets that write this and 3,000 places trying to get coverage on a daily basis. And it was interesting too, in my conversation preparing for this with Mark, there's always this adage of, they wait till the last minute, so we can't go find it in other places. And I think that in some ways that could be true. I think that's a short-term strategy on a broker's perspective. It's a short-term strategy on an underwriter's perspective. I think that more importantly, what I find is that as a broker, I need to make sure that I have a plan with the client, and I also have a plan with the underwriter I'm working with, because they're getting 400 or 500 emails a day. So I've got to be the squeakiest wheel to make sure that I'm staying in front of them. So I think that, I can just tell you right now that, I try and get ahead at least 60 days of a renewal if I can. And some markets won't even accept applications before 60 days. Some won't accept applications before 30 days. And so while they may accept it, they may not open that email until 15 days before the renewal. So it's really important that you've got someone that you can trust that's going to go into the market and fight. It doesn't mean that I'm not going to deliver you a renewal 4 days before renewal, but I'm going to let you know what's going on along the way. But that is a big piece of this. I think that, there's, I'm an optimist, not a cynist. And so, I try to be a student of whatever I'm doing. And so what I've found is that, yes, there is a management side of this. But more often than not, the reason why things are getting to you late is because somebody's just not staying on top of it as much as they should. And that's not a hit on anybody. People just get busy. It's like a busy Saturday in your dealership, right? You try and schedule people to come into the F&I office, but they all show up at 3 o'clock and you close at 5, right? We've all lived that. So, that's kind of where these things intersect. Is there anything before I move on to my next topic, Mark and Kim, do you have any more feedback on that?
I was just going to say that no matter, I think how much you plan in advance and you try and hit that 60 days, it always seems like the last few days before you need to do that renewal, you're scrambling.
Yes.
And just, I'd say just put it in your calendar that it's going to be that way and plan for it.
And try and not have a January 1 renewal. If you're my client, we're going to try to move that date, because I don't want to be up on New Year's Eve trying to figure this out, right?
We actually just did that. So we moved it from January back to September.
The lesson, I think the lesson that I learned, this was the first year that we had ever used a broker. And, historically, we just bid out to Century, Federated, K&K, whoever, and got the results back and went through that. And, you know, lesson learned with me on going through a broker and shopping insurance the way that you do, is that, you know, I came to the understanding that there's not a lot of players in the industry out there. And so, you know, it's not really reasonable to go out and think that you're going to pit 2 or 3 brokers against each other to get the best bid. I think that that process needs to start a little earlier. You need to talk to the different brokers, find out who you're comfy with, and then pick one broker and go with that. It's a different way of shopping for business.
Yeah, I think, Mark, that's a great point. Actually, thank you for reminding me of that. I will always tell you, I mean, I understand that if Century, Federated, or Zurich is there and you want to shop them, but do not put 2 brokers in the market at the same time, because the way it works, if me and Mark are both brokers and we both go after K&K, only one of us is going to get there. And the issue is that if either one of us can't get everywhere when there's so few markets to do this with, it's not the client's best interest to go that route, because then they can't your broker can't put together the best possible program because they don't have access to all the markets. And it's a strategy too of some brokers to go and just block everywhere in the market, but then only actually focus on one area. So if you take anything from this, do not put 2 brokers in the market at the same time, because it's not going to be in your best interest as the client, as the risk. And I would hope that any broker that you talk to would tell you that, unless they've got some sort of specialty program. Like when Mark and I were talking, Mark was already in the market. And I said, I want to go here, 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 and here. I said, see if your guy's there. He was there. I said, great. Sounds like you're in the right spot. You know, let me know. And another thing I love to do is review this stuff. I'm only as strong as the information that's out there. So I want to see what Mark's renewal look like. Not because I want to go beat it next time. I want to know what it looks like because I want to be able to continue to tell this story to the market. I was just on a call this week with a huge market that writes a piece of the Powersports business, but doesn't understand the casualty side of this to write the garage keepers part of this. And so I'm constantly trying to find ways to bring more underwriters to the table so that there's more consistency, so that it's something that you don't have to really worry about. As a dealer, you probably worry about insurance twice: when you have to renew it and when you have to make a claim. And so let's try and make that as easy as possible. So that's that. Outside of, you know, and so that's really, you know, looking outside of, starting with not looking at this as a commodity, finding the right person you think is going to be able to go out and fight for you in the market correctly. And then making sure when you get to that point that, you know, if you're not having this, make sure you're holding your person accountable, that making sure that you're doing an annual review and taking a look at what your limits were for the previous year and what you want to cover yourself for the next year. Because premium is based off of a couple different things. Premium is typically based off of your top line revenue. So if you have a big year from one year to the next, you could end up having, if it's a market that audits, they can come back and say, oh, you increased your revenue by $2 million. You owe us X. You know, you want to know that going in. So premium is going to be based on your revenue. It's going to be based on the number of employees you have, your payroll, and the number of dealer plates that you have. That's typically in this space, you know, and on the property side, it's based on the limit of whatever property that you're insuring. So, that's kind of that's the big picture. I have some examples of where I think there are, you know, places to look for. But before we go into those specific things, are there any questions from any people that are on this call before we move on?
Zach, this is Darius. No, we haven't had any questions. I think you're flowing really well, so I would keep going.
I mean, it's insurance. It's not very fun. So there are a couple places that you probably haven't thought about, or maybe you have and you've had these claims, but these are places that I've seen that, as an outsider looking in, I would have thought that the biggest exposures are going to be on completed operations, which that's the work of your mechanics. So if you let a motorcycle go and the brakes aren't connected, that casualty claim, or smash and grabs. You know, that you see those. There was one in Powersports business this week. You know, the smash and grab business. The largest number of claims I've had in the last 2 years is from something called false pretense. And false pretense is someone who is a person that misrepresents themselves with a stolen identity and buys a motorcycle. And so this is, I've had these claims within the hundreds of thousands of dollars. And what ends up happening is if these criminals figure out that there's a weakness in the link within your dealership, they're going to hit you multiple times. And you're not going to realize you've been hit multiple times until 6 to 9 months down the road, when the banks start realizing that they're not getting paid. So as you're uncovering the first one, then you get the second one, and then you get the third one, and then you get the fourth one. So what does it look like when we're talking risk management? What does it look like when what is your F&I process? And making sure that the person that is buying this vehicle is the person they're representing you. And so and this is also a problem in the car world too. This is not and the boat world, and it was rampant during COVID, because as people were enjoying the fruits of all this cash, and people were selling things like crazy, a lot of compliance issues in F&I offices really kind of went away. And so, what are you doing to put that, give the tools to your finance office to be able to make sure you're selling the bike to the right person? And also, what are your limits right now? When I'm reviewing policies, the majority of people that are in some of these package policies have got a $50,000 limit. And I mean, think about the vehicles you're selling. Yeah, if you're selling a Yamaha R3, that's not going to be a big deal. But if you're selling some of these bigger watercraft, some of these more decked out motorcycles, UTVs, that could really hit you, especially because what ends up happening is that, and this is a big red flag, is that not only are they buying the bike, they're buying every single thing you offer them in the F&I office, because they don't care. It's not their money. And they're going to say yes to everything, right? And that's going to make your finance manager even happier. So if you do nothing else today, I want you to go back and look at your policies and look and see what your false pretense limit is. And I would say you should have nothing less than $100,000 in false pretense. And some of these policies that I've reviewed recently have zero in false pretense. Another piece of this too is employment practice liability, and that is wrongful termination, claims, sexual harassment. There's a lot of dealers that don't even have this coverage, and what ends up happening too is that there's always a tail in this coverage. So there's a date that they'll go back to, and so making sure that you're covered there, because everyone always says, "Oh, I know my employees so well, it's all great." Well, if someone that's great until it doesn't happen, and this coverage is relatively inexpensive in comparison to everything else that's out there, and I've seen it happen, and it's not pretty, and you will be sued, and this coverage will help you with that. Outside of that, those are two big things. I don't know, Mark and Kim, do you have any specific areas within those examples, or anything that you want to give or talk about, in what you've seen in claims outside of that flood claim that you had, Kim?
Well, I would say that in the Washington, D.C. area, we have seen our share of identity theft. And we definitely have experienced what you were describing. We had one on a Vanderhall and we had one on a Slingshot, and both of those bumped up to our limits, because I think at the time our limit was $50,000. So again, barely enough coverage to do the claim. But I would say the biggest thing during our renewal process this past year was to be able to tell the story of what changes we made. And so we now have an ID scanner, and we faithfully run the ID and check for fraud on every single transaction before we almost get started talking about the sale. For the smash and grabs, we've put up guardrails. I'm just trying to think some of the things we've done. We had to talk about forklift education with our guys, and just all these little things, but the insurance company wanted to see it. We had to send them pictures. We had to show what we've done in our backyard and different things to make them feel comfortable even with writing the coverage.
Yes. Yeah. And there's going to be more and more. There will be a barrier to entry eventually when it comes to dealer open lot. I was talking to Mark this week about that. I said, when are you going to require that, dealers have these ID scanners in place? He's like, it's coming. It'll be here in the next 2 years. So that these things are going to eventually just be part of the risk management requirements for underwriting. Another thing, another piece of this too is I always get in underwriting questions is, do you offer demos? And Mark brought this up in our pre prep for the meeting. What I will tell you is that if you do demos, and there are more markets that you think will allow it, but it will require that you have a plan in place for it. So they want to see a waiver. They want to see a waiver that releases them a liability. They also want to see a waiver that releases them of property damage. And I can tell you from my own perspective is that the waiver that I used in my dealership, whenever we had issues, I was always able to go and recover the property damage every time. And so, and some of that is the cooperation of the customer. Some of that really is making sure the customer understands, hey, this is what you're signing. Because if you can get them to acknowledge, hey, if you drop this, it's your responsibility. That's a big piece of this too. But they also want to see that you've got a route that you're going on, that you're leading it with a staff member. These are all those type of things that will help you in that demo space.
Hey, Zach, would you like to take a couple of questions from our audience, or is this a good break for doing so? You want to continue on with your presentation?
No, that's great. I mean, I was waiting for somebody to raise their hand.
Yeah. So this one, you're gonna either know it or not know it. I have no idea. I even Googled it to find out what it meant when the question came in. But have you heard of, or do you have any experience with homogeneous captives?
Yeah,
go ahead.
I do. And what I'll tell you with a captive and why it doesn't really work in this space is the amount of capital it takes. If we're looking at the industry as a whole, yeah, there is that top percentage of people that can fit into a captive. And I would love to create captives in the power sports space. There is a tremendous amount of collateral that you're putting up because you're basically self-insuring yourself with a moderator that's going to help manage that for you. So yes, it does exist, but it's going to only exist for a client that's got enough capital to make it work for themselves. So, a good example of maybe a better way of how this would work would be to create a group captive, say like with your 20 club, and because you're as strong as your weakest dealer in that as well, because at the end of the day, if there's a claim, you guys are all paying for it. Now, and if you don't have claims, then there's the financial benefit years down the road of being able to share in the the rewards of not having claims. So that's my captive question.
Right. No, thank you. So this next question, I'm gonna lead in with an explanation here. The submitter says, when a dealer sells a unit and the lender is unable to collect on the loan, the lender recoups the loss from the dealer open lot policy. In your experience, how much do premiums go up or down based on the amount of fraudulent applications a dealer experiences in a given year?
That's a loaded question because there's two things here. Premiums going up is one piece of it. Being dropped is the other piece of it, right? And so that really depends. Well, first of all, premiums going up. Everything's based on actuary. So, for instance, I had a dealership group last year that had $200,000 of false pretense claims, but I was able to show the underwriter the risk mitigation things that they put in place, like making sure you're checking IDs through electronic stores. That ended up only increasing their premium less than 10%. Now we took a bigger deductible, right? So there's not like if you get one bike stolen, that's $20,000, you're going to go up by this much. It really just depends on what the pool is. What I'll tell you is that if you've got the coverage for it and you don't want to come out of pocket for it, then use your insurance, because I mean, you're paying for it anyway, and you're probably not going to see that big of an increase. Everyone's always so afraid to make that. Now, if you're having a high hit rate of claims, then that shows there's something managerial inside your store that needs to change. But if this happens to you randomly, make the claim, recoup the loss, that's why these people are here. So that's my
Great,
long
great. Okay. And then the last question I've got that's come in is, we're talking about companies leaving the market or leaving, kind of pulling back. Is there any, do you foresee foresee the reverse? Anybody coming into the market or to get involved that maybe hasn't been before that could make any impact, or is that really just, don't you see anything like that on the horizon?
Well, I think that in my experience, there's always been an ebb and flow, right? If we look at the last couple of years, Philadelphia, Harco, and Century have left the market. Philadelphia and Harco being markets that can be approached by brokerages, and Century leaving non Harley dealers with their direct writing. So there's always going to be somewhere that pops up with, it's going to depend on what happens with the car markets. What I am trying to do as an individual and as a company with Apiar, we are trying to go out there and proactively find places that will write this type of risk. And the reason why most underwriters are so adverse to it is because they don't know it. It's the same reason why there's nobody in this space as brokers trying to call on you, is because they don't know the business. They don't know how to get in front of you. They don't know how to talk to you. And so just like I want to be an advocate for you as an industry of clients, I'm actively, whenever I have a conversation with the market about anything, talking about, hey, have you ever considered this? Do you play in the garage space? Because if you play in the garage space, have you looked at the power sports market? Have you looked at and then and if they're in the RV and the marine market, I say, hey, have you ever considered? So there's that. That's kind of a crusade that I'm on as a representative to go and find more. So my hope is that there'll be even more, but there's always someone always replaces someone else.
Well, Zach, we get a lot of questions from dealers about different topics, and that's one of the, as I was saying, but when we opened up or before we came online, the NPDA really tries to be neutral. We're Switzerland. We just want to get the best answers for our dealers. And that's why I think it's great to have, in particular, Kim and Mark both here today, both as board members. And I'll get questions from dealers, and I'll farm those out to them, and they actually respond and get back to people. And while it's great to have folks like you as a partner, our board are experts because they're in the midst. And so those of you listening today or members, if you have questions, you can come to us. We'll get the answers. We'll try to get the answers for you. And we're seeing this on a regular basis, having folks like Zach available to help steer us in different ways. But again, that's what I think is fundamentally important about the NPDA is it's a group of dealers who actually are facing these things on a regular basis, and they're willing to share. And it's just nice to see the like even today with this. I do have one other question that just popped in. What other companies are there besides Zurich, Century, Federated, and Harco? Last year at renewal, we had a no bid by one agent that was working on our policy, and the other agent could only quote Zurich. Our hands were tied as there seemed to be no marketplace.
Where do you live? Because every state's different. So that's not, so there are very few markets. I'm aware of only one that is a broker market, so let me back up a little bit.
Well, I can tell you where they live, California.
It's not good. Not
California. Well, and so Zurich is, so let me start by answering another question and getting to that question. Zurich historically was kind of they were the group that really kind of had pushed forward in this space years ago, right? And they became the gold standard. And then as claims happened, they were in less and less states. And so what ends up happening, and so there's a lot of former Zurich employees go and create these what they call MGAs and go and put this, they go find some paper, they put together a program, and they go forward. So specifically in California is difficult, but there are markets that I'm aware of that I can write in California with, but it's not. But if you go into a commercial broker that is a customer or a local friend of yours that doesn't play in the space, they may not be aware of it and they may not be appointed by it. Had I not spent the time I spent at a top 10 brokerage where I had access to a lot of markets, I really wouldn't have been able to come to Apiar and do this. We're punching way above our weight because for 4 years I was pestering the hell out of these people to say, hey, this is going on. So the answer is, well, Harco's not even an option for you anymore because they're pulled out of the market. And so Century, if you're not a Harley dealer. So, there are other places to go. You just have to know how to get there. But you've also got to be able to be appointed by them. And that's either a buy-in by me begging and pleading or me having a certain size book that says, okay, these people are this guy's the real deal. So that's the long answer to your question.
Thank you. So the person who wrote that in, please, if you send an email to info@npda.org, that'll come right to me. I'll forward that on to Zach if you guys want to have a little offline conversation. Anybody who's watching today, feel free, send it again. Go to our website. You can contact us there. We'll take everything. If it's questions that board members can address, we'll also go that angle too. And we're just here to serve you.
Any questions right now, Darius? You want me to keep
No
babbling?
other questions. No others have come in. Go ahead.
As you're thinking about this, and looking at what you've got, where you're going, I would say that the number one thing you want to do is get ahead of it. And get ahead of it by getting ahead of it, I would say, if this is something you want to have me or anyone else look at, I would start looking at it 6 months ahead of time, because there's a lot that can be done if you are able to give someone all the information they need to be able to go and start having conversations. Because, like, for instance, with me, not only am I talking to dealers all the time, I'm talking to markets all the time. So if I know that I have a risk being a client that is similar to what I've got currently with the broker, I can tell the underwriter, hey, I've got this coming down the pipeline too. Can you take a look at it? Can you go there? And so when I was speaking earlier about staying in front of these underwriters, as we show that we're a valuable place, as an industry to place the risk, then we also get more attention as well, because I'm competing. You may be a $5 or $6 million store, or $10 million store, or $20 million, $40 million store, but I guarantee you the car dealer that's sitting in front of you in line is 2 or 3 times that, right? And so if revenues, if premium is based off revenue, there's a hell of a lot more dollars over there. So the more that we're able to find places that will spend time with us, the better. I'll also mention this too, and I don't know how many people are in the really small space. Like, if you're below $2 million, there are in revenue, there's not a lot of spots for you. And so that becomes very different. As I look at dealerships in different sizes and analyzing their policies versus where their revenue is, there's a spot where, like, you're going to be paying a minimum of X, whether you're a $900,000 store or a $3 million store. But then once you kind of get above a certain threshold, and these are arbitrary numbers, but once you get above a certain threshold, so there is a certain space in this business where you are a commodity. And one of the things I love to do is create a program for that. But that's pie in the sky. That's down the road. But as you get bigger, it's easier. And as you grow into multiple locations, it does become a little easier, because you can then spread the risk around outside of just one geographic area. So, Kim and Mark, is there anything, as I'm babbling on here, that has come to your mind, or any other topics that ring for you guys?
I can add 3 pieces. Kim talked about it. We use that same identity theft device, a shameless plug for a company called Fraud Fighter. But it's a really unique piece of equipment, because most IDs have a lot of security devices built into them. And that's what that device goes out to look for. Most fraudulent IDs started out as a legitimate ID, and in the process of modifying those, a lot of those ID pieces in there are damaged or destroyed. So that's what that device goes out to look for. But it's been really helpful for us. A lot of times when a customer's ID comes up as not being up to snuff, we'll let the customer know we need another form of ID. They'll say they'll go home and get one. We never see them again. So we're good on that front. On the EPLI coverage, a lot of PEOs offer that through their own services. So if you're utilizing an employee leasing organization like ADP Total Source, Paychex, a lot of those companies have that. You can actually get your EPLI coverage through them, and then it's kind of got a layer of separation between that coverage and your dealership coverage. So if you do have a claim, it can help to mitigate some of the your rating factor for your business not being as attractive in the market because you don't have claims that really show up on it. And the last piece that I was just going to bring up, you talked about demos a little bit, but you tend to, a lot of people may not realize this, but there are serial litigators out in the marketplace. That person who's had a slip and fall at 7-Eleven has also had 7 other slip and falls at other various grocery stores and chains around the market. And now, that's really turning into their serial litigators for automotive accidents. And, they're just riding around looking for a company vehicle that's got logos all over it. They're going to pull in front of it, slam on the brakes, and they're going to have whiplash, and they're going to have, some attorney who's got his name plastered all over a billboard calling you the next day. So I think one of the recommendations that I've heard from other brokers and insurers is that, and this is a tough pill to swallow, but your company vehicles are really best if they're solid color with no decals, no logos on them, anything to identify that that's actually from a business.
Yeah, you're taking the risk of either having a billboard with that exposure or not having that billboard running around.
Hey, you're advertising that you got money to pay out.
Another thing you mentioned in your notes too, Mark, was business interruption. And business interruption can be a real black magic. But there is, what I've found is that the good underwriters will require a certain worksheet to get to the right business interruption number. And that basically it's your revenue minus your expenses, and then the amount of time you want to have coverage for in that space. And so that is, but also it's important to make sure you've got great records for that, because that is going, when you do have one of those claims, you're going to want to have as much information as possible. And of course, everyone's got a great DMS. So it's pretty easy in this business to be able to say, these are our trends. This is when it's busy, especially if you're in a 20 club, you've got lots of different opportunities there to kind of prove what that looks like.
I see in 20 groups that business interruption coverage is typically the second biggest problem that dealers have when they actually make a claim. And, I personally recommend to all my dealers, I think the best thing you can do to truly understand the coverage that your insurer provides is to write out a couple of scenarios and say, here's worst case scenario. If this happened, tell me exactly how you would pay out for this particular scenario. Get that in writing. Verbal is meaningless in this industry. So here's the scenario. Tell me exactly how it would pay out, because a lot of people think that they've got all this deep coverage, and then the insurer's coming through and saying, well, we only pay profits but not expenses, or we only pay this but we don't pay for personnel, or we don't recover for vehicle income. There's a lot of holes in that, and so you really want to have a true understanding of how exactly that is going to pay out.
Some great advice. Do we have any other any questions right now, or?
No, we're good. I don't know if Kim has anything she wants to add, or we can go ahead and close this out here for today's presentation.
I don't think I have anything else.
Well, folks, I just want to thank you all for listening. First of all, again, the NPDA, at $31 a month as a membership, or even less if you're an affiliate for a second or more rooftop, we're here to give you value for that membership and that investment. And we've got folks like Zach and our board members who are experts. We're here to help you. So consider joining, being part of our organization, but also just take advantage of the things we're providing and offering as members. We are about education. We've got some exciting things we're going to be launching at the AIM Expo. So hopefully you'll attend our meetings. Again, Tuesday, 7:30 is our first one. We've got meetings throughout the week. Go and hear Zach, but also look for him. Go talk to him. He'll be at our partner presentation on Wednesday morning. Recognize the guy, say hello, and corner him and get your answers to your questions. So with that, thank you all for listening today. This again has been recorded. We're going to make it available. And Zach, just thank you for your time today. Kim and Mark, both thank you for all your leadership on behalf of the work you do for the NPDA. And with that, we'll go ahead and wish everybody a great day.
30,
you.
31 bucks a month. That's 2 cups of coffee at Starbucks.
Thanks again, everyone, for joining us today. Have a great rest of your days and a great week. Take care.
Thank you, everybody.
Thank you.